Hello everybody and welcome to this week's Motor Trade Radio podcast powered by eBay Motors Group. It is Saturday the 29th of October and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. This is episode 58, season 8 of Motor Trade Radio, bringing you all the chatter that matters. Once again, we've gathered together this week's big car retailing stories across the franchised and independent sectors for you to enjoy all in one place, on demand, on your podcast feed.
Well, we've managed to get through a week since our last podcast, Curtis, without much happening in the world of politics. Maybe that's because the OBR statement's probably has been deferred.
Yep.
But yeah, it's gone a little bit. I say not
Kicked into
quite. There's been a lot of changes, hasn't there? There's been some.
There's been some comings and goings.
There certainly has. But yeah, we've still got the same Prime Minister at the minute, haven't we? So that's a good thing that we're kind of a week on. We're still the same.
Yeah, a week on, and the same Prime Minister and the same Chancellor. So we're doing well.
Doing well, aren't we?
Things are looking up.
They are. So with the leaves down, we're certainly into autumn now, and we're on, as Curtis said, the episode 58 of the year so far. So very quickly moving towards the end of the year and the end of season 8. Curtis, can you believe that?
I know.
It's frightening. So we have got a couple of shout outs this week. We've had the pleasure of interviewing Derren Martin, who's Director of Valuations at CAP HPI this week. And you can catch that interview with Derren on your podcast feed. It was published on Friday morning, yesterday of this week. Again, Derren giving a little bit more insight and a little bit more of the detail behind that headline figure of what happened in the month of October, and thinking about what to expect in the month of November. But certainly the discussion on electric vehicles was interesting, wasn't it, Curtis?
It was definitely, and I urge anyone listening to the podcast today to check that out, because we were talking to Derren about some of these movements on EVs, and there were a number of downward movements, and some of them were fairly significant. So, and I guess unexpected. So it's good to get some context behind that.
It is, yeah. And I don't know if anybody's seen the social feed that I shared this week, but there was a podcast with Michael Dunn. And anybody that follows Michael Dunn, he does the Zozo Go. And he talks a lot about electric vehicles and very much in the US and China market, but he interviewed he was talking about 1.2 trillion expected from automakers to be spent on electric vehicle investment by 2030.
Wow.
Curtis?
Yeah, that's some figure, isn't it? 1.2 trillion.
Yes. Yeah. And it's Tesla who are doing the most spend as well.
Yes.
Plan for the most spend. Very behind that is I think it was VAG or VW were behind that, but significantly behind. So,
has Elon Musk got any money to spare now that he's bought Twitter? That's a question we've got to ask ourselves. $44 billion.
Well, yeah. Let's not mention the kitchen sink or the bathroom sink or whatever that was. But we won't go there, Curtis.
No. Also in today's show, we've got Stephen Whitten with his regular Men Able Moments slot, and he'll be talking about inclusion and sort of identifying some thoughts that maybe get overlooked a bit. So that'll be in the second half of today's show.
Yeah, and don't forget, Thursday the 10th of November is AM Live down at the NEC in Birmingham. It looks like it's going to be a busy event, Curtis, this year. So I know you and I are going down. So it's going to be busy down there. So if it's not on your calendar, then I'd suggest probably getting it in your calendar and getting down there on Thursday the 10th. And then we'll catch up with you later on in terms of some of the awards, but those more in December as the year sort of runs out. But so what have we got in the headlines other than the two recordings that we've got with Derren and Steve this week, Curtis?
Right, so headlines this week are from Car Dealer, Automotive Management and Automotive News Europe, starting with cost of living crisis influencing 75% of next car purchases, but the intent to buy remains strong. That's according to some new research from eBay Motors Group. no clear advantage for EVs when it comes to servicing, finds Epics. So that's an interesting one, because they're looking very much on the sort of fleet angle and doing some interesting comparatives there. Latest financials from Kazoo, Group One, and Inchcape. And that really follows on from the Q3 reports that we've been following over the last couple of weeks. And we also say and finally this week, a fond farewell to one of the most popular cars of all time.
Yeah. Not saying that we did talk about that a while ago, but we will catch up with that one at the end there.
But before we go into the headlines, we'll start with that extract from the interview that Phil and I did only yesterday with Derren Martin. And it's Derren looking at October trade values and giving us an indication on what some of the headline trends were and what actually prompted them. Well, Derren, a lot's happened since last time you joined us. We've got another new Prime Minister, another new Chancellor, and that's before we go on to interest rates and inflation. So how's your October been?
Yeah, it's been, hi Curtis, hi Phil. It's been an interesting month.
Yeah.
Values have moved, but yeah, I did actually flippantly put in the monthly overview that if your car's been in stock for longer than a prime minister's been in the chair, then maybe you should be looking to retire.
Well, that's your new benchmark, Derren.
Yeah, that 44-day point.
40, yeah,
that's how long
44-day turnaround.
Yeah,
it's not good, but like you say, probably. Would you say there's more or less turbulence in used vehicle values than there is in number 10?
I think definitely less. Definitely less turbulence in used car values for most of this year. Actually, it's been a pretty stable environment, and that's continued. So it's but there's lots of moving parts, as we always say. Devil's in the detail. But yeah, at the moment it's all holding up pretty well for the time of year. Actually.
I mean, if we get onto that, we think the editorial is now available, and it'll be through your social channels or on the CAP HPI website. But when we last caught up, we were talking about a slight increase into the month of 0.3%. I think that was following a slight drop of 0.3%. And that was so we've had a kind of succession of small movements month on month over a period of time. Do you want to talk us through with what's been happening and that headline figure at 3 years 60 as we sort of from October going into November now, and how that sort of compares through the months?
Yeah, so it's 0.5% down at 3 years 60. It's similar at younger ages as well, 0.4% down at 1 year. And that we've seen very small movements probably since around April, May time. It's been a sort of negligible movements down really. And compared to previous Octobers, that's actually the strongest October. So the smallest downward movement we've had, apart from last year when values continued to increase after that crazy few months. So it's the sort of the calmest or the most positive October we've had since I'm looking back at records sort of early years of this century. So it's very it's pretty robust, and we were expecting it to have dropped away a little bit more than it has done, just because it's all doom and gloom everywhere, and we've sort of been joking about what's happening in politically, but for policies to be written and then ripped up in a calendar month, you'd have thought that people were more concerned with their money and more concerned with cost of living. But most of the dealers that we've spoken to are they're pretty upbeat about things. It's not been quite as good in October as it was in September, but that is normal. And the retail market remains pretty strong, I would say, and accordingly, values haven't dropped by much. So retail is okay, and I would say that the trade market is even stronger than that. So it's a fairly positive picture at the moment.
So again, I mean, a great catch up there with Derren. That sort of we tend to cover quite a lot in that sort of 20 minutes interview with 20 minutes, 30-minute interview with Derren. But that was a snippet from that interview, and clearly, as always, devil's in the detail, but very interesting that around that sort of fuel market and what's happening with petrol, diesel, and EVs this month.
Yeah, Definitely. And the full interview actually goes into Derren's views on how November could well play out. So, definitely take a listen to that, because he does have some interesting thoughts on November, which is a month that typically sees more than average drops. So see what he has to say about November.
Exactly. So we'll head over to the first story of the week. And as Curtis said, this is coming from Car Dealer, and some insight here from eBay Motors Group on the cost of living crisis having profound effect on used car buyers. So this is saying that the survey finds cost of living crisis influencing 75% of next car purchase. Now, interestingly, we touched on that a little bit in the interview with Derren in terms of the profile of vehicles and potential buying habits of vehicles. And I think you or Derren mentioned the word buying out a necessity more than desire, potentially. So, what's your thoughts on this one, Curtis?
Well, it's an interesting one, and I did work with the guys at eBay Motors Group on this release. So what it is, it's based on their regular consumer insight panel research. So this time around, it quizzed 2,000 new and used car buyers. So that's interesting in itself, because it's new and used. So this is across the UK, and as the headline suggests, it found that 75% says that their next car choice will be influenced in some shape or form by the cost of living crisis, with 32% saying that they were putting that next purchase on hold. So that in itself is actually quite interesting, because a large proportion are thinking of going ahead with their purchase, but it could well be a different purchase to what it would have been in normal times. So the research shows that 28% said that recent rises will mean they'll be purchasing a cheaper car. So they're staying in the market, but they'll be buying a cheaper car. And 16% saying that they'll be looking at a smaller car. And a quarter of respondents said the increases will have no impact on their next purchase, which I think brings us back to that necessity purchase, doesn't it? Because they need to replace their car. It might be old, it might be getting on. They may have needed to replace it earlier in the year or even last year. So these necessity purchases are very, very important at the moment.
Yeah, and you say within that sort of 74%, with obviously the increases in terms of influencing their next car purchase, they were talking about obviously the inflationary impact of goods and services, the price of petrol and diesel at the pumps there, and the cost of borrowing has obviously increased. I mean, just from vehicle financing has obviously increased as well as a result of the interest rate rises, and they also cited that an impact from council tax increases as well. So it is you're getting a lot of increases in a lot of different consumer spending areas that's having a profound, as you say, impact on that decision. I suppose the positives of this, as you say there, Curtis, that they are still interested in buying. They still are looking at changing their vehicle. It's just the type and what they spend on the vehicle may have changed. So it's a kind of I don't know. It's a positive with a negative, isn't it? In many ways.
It is, yeah, and it's kind of summed up by Lucy Tugby, who's the marketing director of eBay Motors Group, who says our research shows the resilience of the car market, with many buyers saying they will be purchasing out of necessity, despite the impact rising costs are having on their household budgets. So that there is a positive to be taken away there for dealers.
Yeah, definitely. So, I mean, we mentioned EV, and the story in AM Online is no clear advantage for EVs when it comes to servicing. And this is content from Epics, who have looked at their OneLink system and talked about obviously the difference between the cost of having a vehicle repair on an EV compared to their equivalent combustion engines. And this is an interesting one, this one, isn't it? Because everybody talks about EV and the fact that there are fewer moving parts and fewer necessity for service and aftermarket. But actually, this highlights that actually at the minute it's still fairly costly to get your work done on your electric vehicle.
Yeah, it is an interesting one, this. And as I alluded earlier, it's very much from the fleet perspective because fleets are obviously hoping that they will save money on the EVs that they put on their fleets because, as you say, there's fewer moving mechanical parts. But what epics have they've looked at family hatchbacks, large SUVs, and panel vans, and compared petrol and diesel against EV. And this piece says that the results are mixed when it comes to costs, which include tyres and repairs, the number of workshop visits needed, and crucially for fleets, the time that these vehicles are spending off-road due to mechanical or electrical problems.
Yeah, no, it's interesting you mentioned the tyres in that one, and we know with the talk on EVs and the acceleration of these that I think with the fleet market have been talking a lot about how they control that on electric vehicles. And interestingly, on a webinar that I was invited on to this week from Global Fleet Association, was that the fleet market in general is trying to think about ways of how the fleet sector can control the torque curve on electric
Yeah,
vehicles to stop the wear and tear of electric vehicles on tyres. Sorry, because what they're saying is that the first thing a driver does is to obviously test the acceleration on that electric vehicle that they've got as a
exactly.
company vehicle, as a company car, and it burns through tyres. Eventually, they start to sort of realise that actually by putting your foot down, then you get a smaller range, and therefore probably not the thing to do. But I think in that first instance, it's what is the 0 to 60 and how quickly can I get away from the lights? But it does have a direct impact on that tyre wear and tear on this, as they sort of intimating in this data.
It does definitely, as you say, a lot of fleets are discovering that their tyre costs are shooting up. I mean, maybe if we just look at one particular example, which is a family hatchback. So the models that they look at aren't actually named, but over 3 years, 25 to 30,000 miles, the EV averaged 5.7 visits to a service outlet against 5 for petrol. So already that's that's actually weighed more heavily in the EV's favour. 3.2 days spent off the road against 4.5 for the petrol, and workshop servicing costs, including tyres, of £431 for the EV compared to 412 for the petrol model. But if you apply that to a fleet, that's
Mm-hmm.
£20 extra per car
Yeah.
across the fleet. And that could be across 5 cars, it could be across 50 or 100 cars. So
Yes.
big difference there.
Soon starts to scale. I think again we're at this point of change, aren't we? As the volume starts to increase, then that efficiency should start to come down, and the cost and things like this start to come down. But you are at this midpoint that we're not necessarily got the volume throughput yet, and some of these costs are sort of unknown until now. So we'll see how this one goes.
You're listening to All the Chat That Matters on Motor Trade Radio, powered by eBay Motors Group. This is your weekly one-stop shop for the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed. Next up, we're joined by friend of the podcast, Stephen Whitten, for his latest Menable moment. This week's theme is diversity and inclusion in the workplace, focusing in on one specific group.
Hi guys, yes, it's time for another Menable Moments, and I'm back from the dreaded COVID and raring to go. It did wipe me out for a couple of weeks, I've got to be honest, so please have some sympathy with anyone who gets it, because it's awful. But anyway, back and up and running now. So I want to focus in on a particular group in this week's Menable Moments, and that is a group that I'm kind of getting a bit of a vibe. I'm starting to feel, dare I say, a little bit left out, a little bit marginalised even, maybe. Because I am more and more now becoming a massive ambassador and advocate for all things diversity and inclusion. And my God, does our industry need to sit up and take notice of that. But I want to give a shout out to the people who have been the staple of our industry, for as long as I've been in it, and that I know of. And those are the, let's put it politely, men of a certain age. And I could say middle age, but I don't want to do that because that conjures up an image. But let's be brutally frank, that's what I'm talking about. Because our industry has rather a lot of them. And I know because I'm part of that group. But we are the ones who have been running the industry, make up the leaders, the managers, the people who have been in the industry for a long time. And I can get that actually it feels like all this talk of diversity and inclusion, mental health support, is it really aimed at that group? Well, I can tell you fairly and squarely from our perspective that yes, it is. And the reason I say that is because I absolutely recognise, again from personal experience, that men of a certain stage are quite often in a situation where they are managing their career. They've got all the stresses and anxieties of business, of what's going on in their life around what they've created around them, often if it's their own company and stuff. And at the same time, could quite possibly have dependent children, a family at home that relies on them. And at the same time, have ageing parents. And so it's very often the case that men of a certain age are kind of in the middle and sort of stuck between these two places. And it's really anxious and it's a really difficult time for them and for all of us. So in this week's Men Able Moments, I really am reaching out to that group and saying, look, we've grown up as a generation not really talking about mental health and not facing our feelings and our emotions. And I saw a fantastic quote on LinkedIn earlier in the week that said, people can and people do and people will talk about their emotions and their mental health. What we have to do is to create a culture where it's usual to do so. Now, the environment I grew up in, it was certainly not usual to do that. And for that group of people that I'm particularly homing in on this week, I want to just say, you know, we really are, or you really are, the group of people that need more than anyone to know that you have support and create this shoulder-to-shoulder approach. You're not alone. In the last week or so, I have had a number of conversations with men in their early to late 40s who are finding life tough and stressful. And in a couple of cases, it's been because they've still got a dependent family, young children, and they've also got aging, maybe ill parents as well, and they're worried about that and what they can do to help and support. And as I've said before, us men, we do like to fix things. And when things feel that we can't fix them, we either don't talk about them or we become very stressed and anxious about it. So no apologies, really, for homing in on a particular group this week. I wanted to bring that to your attention and say November is International Men's Month, and November the 19th in particular is International Men's Day. Apologies, I'll correct that. November is Mental Health Month, that's what I meant to say, and the 19th is International Men's Day. So look out for loads of stuff coming your way on that front, and please, let's just create this shoulder-to-shoulder ethos in our businesses and make it usual and normal to talk about our feelings and talk about what's going on, because you genuinely are not alone. And there is support there. And I really do think that in our hearts, we all really care. And there is a lot of love to share. And I'm not going to get spiritual, Phil, because I know that sends you over the edge a little bit. So apologies. But you know what I'm getting at. Anyway, some good news on the horizon. I must give a massive thank you not only to you guys at Motor Trade Radio Podcast, but also to your sponsors, eBay Motors, who in the last week I've had conversations with, and they're really pleased with what we're doing with Men Able Moments. And they really are behind the whole thing about let's make this a culture of being usual to talk about this stuff. And they're supporting it so much that in the next few weeks or month or so, they are going to give us a slot on their Headlights newsletter. Now, not sure when that's going to happen, but look out for that. If you're not already signed up for it, please do. I've had a scan through a few of them and they are brilliant. So apart from this podcast, that is the only other place or the main place to go and get your news and views about what's going on in the industry. And we're going to have a bit in there as well. So look out for that. So thanks again, chaps. Hope that was okay this week. As always, I'm contactable and on stephen.witten@menable.org or through LinkedIn or through the website, or even happy to put out my phone number if you want. So please get in touch. You're not alone. Stand shoulder to shoulder with your friends and colleagues. And on that front, let's forget the stripes and the badges. Doesn't matter what the badge says on your door about what your job role is. Underneath that, you're a human being and you have stresses and anxieties the same as anybody else. Let's all support each other, especially as the clocks are going back this weekend. And that's just another little reminder of just how we all need to be cheered up quite a bit. So look forward to catching up again soon and have a great weekend. See you soon. Bye.
There you go. An exclusive there from Stephen.
Yes.
What you found, I think was he classing us in that sort of men of a certain age?
Well, I'm surprised he didn't name check us, Phil. I think we got away lightly there.
Yeah, he kept us out of that one, didn't he?
He could have named and shamed us.
He could, but he does make some valid points through that with Steve. So it is, I think he's obviously trying to raise that profile and that view. So great news. And as you say, there is ourselves as the news feed, and there is this other one that Steve's also getting involved with. It's the Headlights newsletter through eBay Motors Group, our sponsors. But again, as Stephen's put there on the end of his Men Able Moments there, you can get in touch with Steve as, again, menable.org, or you can email him at Stephen with a ph.witten, that's WHITTON @menable, that's menable.org, or easy just to find him on one of the social channels because he's always pushing stuff out on your Facebook or LinkedIn.
Now, moving on with the news, we've got some Q3 financials. We've got a roundup of the latest ones, and regular listeners will know that over the last 2 or 3 weeks, we've had Q3s from a number of the big groups now. So I guess we're getting to the end of them now. But so if we start with Car Dealer, and the headline there is Cazoo Boss hails Q3 record performance despite significant loss last year. So that really does sum up the story, because it is a story of two halves. So a positive Q3 against a negative full year that was actually only reported last week. So the story says that the 3 months ending September 30th saw revenues of £347 million. And that figure is actually up by 103% compared to the same quarter last year. And Cazoo says was driven by very strong UK retail sales growth.
Yeah, and they say there, that's the 347 followed by profits of 2 previous quarters of 304 and 278 million respectively. So, I think interestingly with this one is, they're talking about the sale of 23,775 vehicles through that quarter. That was up 82% on the same period of last year. Which consisted of nearly 19,000 retail and just under 5,000 wholesale units. And quite interesting with this now, because that's obviously the bit that you don't hear about from any other operators, that they are talking about figures through wholesale and retail through the
Yes.
Cazoo Cazoo business. But they're obviously there saying that gross profit up per unit, that came to £488 per unit. That was up to on the 309 and £124 per unit in the recording of Q2 and Q1 respectively for 2022. But it was down by 313 on the third quarter of 2021. And then Kazoo are making £801 per unit. So a significant drop there in PPU. And I'm sure that the listeners to the podcast this morning will be probably having a bit to say about that profit per unit and the fact that they're counting wholesale and retail in those figures there. But I don't know. It's an interesting one, Kazoo. They're never really out of the headlines these days, still, are they?
No, and as we said at the start of this story, that they do actually reference the full year accounts for 2021, which showed losses of £329 million last year. So just to give that a bit of context.
Yeah, and there's a quote in here from Alex Chesterman, who's obviously the founder and CEO of Kazoo there, that this is very strong performance, shows the consumers continue to embrace our proposition and the shift to online car buying continues to accelerate. So yeah, interesting results there, and I suppose it's now as we're heading towards the remainder of this year into next year, and no sight of significant volumes of product returning. And from the interview there with Derren, no significant change in the short term to used vehicle values. It's going to be very interesting to see how this starts to build up into next year.
Yeah, and linking very closely to that story was some coverage in AM Online this week, and the headline is Group 1 UK is making 6 times more per unit than Kazoo. So again, this is on the back of Group 1's Q3 results. So this is the global results for Q3, and it was announced by the chief executive, Earl Hesterberg, during the week, and he revealed that revenues were a new record for the group at $4.2 billion, which was a 22% rise on Q3 2021. So in the 9-month period, UK revenues have risen by 7% to 2.1 billion, about 1/6 of the US group's total 12.15 billion global revenue. So showing just how significant the UK operation is to Group 1 as a business. But this story really focuses in on the gross profit per unit, which we just talked about for the Kazoo story. So in Q3 2022 alone, its GPU in new vehicles was £2,995. Yes, which was 6 times higher than that reported by Kazoo, and its used gross profit unit of £1,303 was triple that of Kazoo's. So just showing some interesting comparisons there. What do you think, Phil?
Yeah, I do. I think clearly. I think the strength of the market and demand of the market against the supply of vehicles, allowing dealers to capitalise on that used vehicle margin, but secondly, sort of capitalise on that new vehicle order bank that are still coming through with very little discount and incentives in place. So I think we are still seeing the result of that. The big question will be is what this looks like going into next year, as the bite of the consumer cost of living starts to take a hit and order banks maybe start to slow down. But at the minute, they're still giving significant return, aren't they, in terms of those order banks building? So, I mean, it is fantastic, and some eye-watering results and figures there from those guys.
Yeah, and the final Q3s come from Inchcape, and the headline from Car Dealer is Inchcape reports record order books for third quarter. So Q3 trading update showed revenue had risen by 2.1 billion. So that was up 16% and 24% on a reported basis. So a really strong showing there for Q3.
No, as you say, very good results, and if you remember back, I mean, when we used to get results out of Inchcape, you wouldn't get much around the UK market. It would be purely looking at their global performance, but they are starting to sort of talk a little bit about the UK performance included in that. But again, the business is moving very strongly, and similar to what we were just talking about there previously with Group One, sort of capitalising on the strength of the used market, the strength of that consumer margin retention for both new and used. So, and they've done a couple of acquisitions, and interestingly, talk about the group revenue figures does not include Inchcape's Russia business, which was disposed of in the second quarter of the year. So again, still a very, very, very strong result and performance there from Inchcape.
Yeah, and they actually do single out their used car business, which we've mentioned a couple of times on the podcast. And in the statement, it says, we continue to move forward with our ambition to capture more of a vehicle's lifetime value with Bravo Auto, our digital-first multi-brand used car platform. And that's picking up a lot of traction, certainly in the UK.
And finally, a couple of this is coming sort of a mixture from Car Dealer and Automotive News Europe. And this is the end of the Ford Fiesta. So the Car Dealer is that Ford confirms to axe the fall of the Fiesta, S-Max and Galaxy models in 2023. And this decision brings an end to the 45 years of Ford Fiesta sales. And I mean, how many times we used to look at SMMT top 5, top 10 performances that were just dominated, weren't they, with Ford Fiesta in there every single month, and in that sort of top 5. But it's lost its way a little bit recently, and we talked about it recently on the podcast when this closed production ordering, didn't we? That they said they were going to close order banks for 6 months whilst they get through the backlog of orders. And I think we sort of thought, okay, is it ever going to come back? And I think it's clear that it obviously isn't now. It's a shame, really, because it is synonymous in the consumer market.
Yeah, and you're absolutely right, because the Fiesta for many years, and going back a lot of years, more than I can remember, was always sat at the top of the top 10 bestsellers. Every now and again, the Vauxhall Corsa may have nudged it off, but the following month it would be Fiesta again. And so, yeah, it's been in production since 1976. Which I mean, that's phenomenal, isn't it?
Yeah. We did what was it called? The men of a certain age, as Steve Whittam would put it.
Yes.
I know let's be gender neutral on this one, but they'll remember this. I mean, the changes as well as it's gone. I mean, you look at the original Ford Fiesta now. If you can see one in reasonable nick, then how small they were, right, Curtis, compared to today's models in that super mini market.
Yeah, and the car dealer story is actually very good, because this story got a lot of coverage during the week, but it actually goes into a bit more detail. So it's saying that Ford's Cologne plant in Germany will make the last Fiesta by the end of June 2023. And it also says about production of the S-Max and Galaxy MPVs will cease actually 3 months earlier next year, and they're both produced in Valencia. But hopping over to Automotive News Europe, because they actually give an indication as to what's going to happen next, because if Ford is discontinuing the production of the Fiesta, it needs an entry point. What is it going to do? So it is looking at EV to fill that slot at the entry point to its ranges. And this is very much based on this collaboration with Volkswagen in Europe. So the Fiesta replacement, we don't know its name yet, but it will be produced at that the same plant in Cologne, and starting from summer 2023. So as the traditional Fiesta winds down, the replacement starts pretty much back to back by looks of things, and this will be based on the Volkswagen Group MEB platform, which underpins the likes of the Volkswagen ID4 and many cars across the VW Group.
Yeah, and I think I think Ford have been under some questions recently about where future strategy and plans for not just the global market, but particularly the UK market in terms of that model lineup and the move away from the passenger car and more focus being on the commercial vehicles. But clearly, I think you look at their vision and their lineup of vehicles be right across from that sort of Puma, Mustang Mach-E to your medium-sized crossover and into that sort of sports crossover, and then the lineup of commercial vehicles or vans in terms of those Ford Pro, which is those are all coming under now. So they have got that strategic plan, and if you listen to what Jim Farley talks about over there in the US, they're obviously moving very quickly and quite brave moves at the minute as well. I mean, in terms of put them against some of the other OEMs of what they're doing, they are moving very quickly and have clear strategies and plans of what they're doing.
Yeah.
Whether it's right or wrong, who knows?
Yeah, and I mean, their plans for European production are very bold. So the Cologne is being ramped up, and they're obviously putting in new facilities there. And a second EV, a sports crossover, will be built at Cologne from 2024. And the plant itself is forecast to build around 200,000 EVs a year once it's at full capacity.
Yeah. So as always, we'll try to get into some of the major headlines of the week. There's obviously a lot more headlines that have been covered throughout the week from the media houses that we've talked about there and others. So please do head over to those and check out the other headlines and read these stories that Curtis and I have just chatted through briefly in more detail. Lots going on, and as I say, do listen back to the full interview there with Derren Martin. It's about 30 minutes on your podcast feed. It went out on Friday of this week, so do listen to that. Get a little bit more insight into sort of the detail behind the headlines, and as Curtis said earlier, shares his thoughts on what to expect over the sort of coming weeks in the month of November.
But that's all for now. You've been listening to the weekly Motor Trade Radio podcast powered by eBay Motors Group. Many thanks for joining us for all the chatter that matters. We're back with the headlines next weekend. Until then, it's goodbye from me.
And it's goodbye from him.